Will inflation kill the housing market? This is a question that I've been getting more and more frequently, especially with all the news and talk about how inflation hit that 6% mark the other week, and now everyone's sort of panicking. But I wanted to talk about what my opinion was on the market and inflation and how it's going to affect the real estate market. And by the way, if we haven't met before, my name is Seanu Uyehara. I'm a branch manager with Loan Depot, helping you finance your homes all across the country. Whether you're looking at purchasing your first home, building your real estate portfolio, looking for that vacation home, or simply looking for a refinance, we got you covered. And you can always hit the description below. There's links to more information on how to get your mortgage right. And if you like our content, don't forget, we drop videos every single week. You can hit the like button and subscribe to our channel, and we appreciate all of you that watch. Now back to my question, will inflation kill the housing market? I've had some clients ask me that, and even a friend the other day, he had called me up, his name is Mark, and said, Sean, do you think I have anything to worry about? Because he's been on the sidelines for a few years waiting for the proverbial crash to take place. And I told him, Mark, I really think that if you are still in a position to purchase, you should strongly consider buying. Now, even though the media had come out and talked about inflation hitting that 6% mark, and the last time that we seen that was back in the 80s, I believe it was 1982. In fact, I even had to do some research myself because I wasn't even born yet. So when I looked at inflation over the last 50 years, I came across a website, and I want to show this to you folks. So you can actually see here, back in 1982, inflation had actually varied anywhere from as low as 3.8% and actually went all the way up to 8.4%. Now, being that we just hit that 6% mark again, of course, let's go back in time to 1982. And another thing I wanted to look at was, what were interest rates back then? Some of my clients that I've dealt with over the years, they tell me these stories all the time. When they bought their first house back in the 80s, they paid 16, 18% interest on their house. So when we look at interest rates today at 4%, 3.5%, whatever it is, those clients are always so thankful and so happy to get the interest rates that they get, because it always takes them back in the time, back in the 80s. Let's look at and see what exactly those rates were. I did the same thing. I Google searched interest rates with Freddie Mac over the last 50 years, which is actually pretty cool. So if you ever want to compare rates from what they are today, conversely to what they were back in the day, you can certainly do that. And you can see here, 1982, interest rates, look at that. In January, they were 17.48%. 17%. 17%. Could you guys imagine today if your loan officer said, hey, Joe, today I'm locking you in at 17%. How happy would you be with that? You'd probably want to fight that guy. I couldn't even imagine telling any of my clients that you're getting a rate that high. It's just insane to me. But look at throughout the entire year. The annual average was 16%, and they were paying 2 points to buy that down. The thing I want you to think about is where interest rates are today. Interest rates today are anywhere from 3.75. I've even recently priced some loans that were hitting the 4% range. Now, when I got into the mortgage business back in 2007, interest rates back then were still around 7%. On my first home that I purchased, I got 7% interest rate on my house, and that was the best that I could get back then. To think about where interest rates are today, in my mind, I still think today they are fantastic. Typically with inflation, you will see appreciation take place, which we've all seen that over the last 10 years. And I think we can even say, I think that's one of the reasons why a lot of people are getting excited about buying houses, because they are looking at the appreciation. And most places across the country, you're seeing double-digit numbers. Imagine if you bought a house for $400,000 and next year it's now worth $440,000. And then the year after, you're looking at almost $490,000. And then the year after, you're over $500,000. In 2 to 3 years, you could have almost eclipsed $100,000 worth of equity in your property. Those are insane numbers that you can't just save up and hopefully one day have an extra $100,000 in your bank account. The other part to the inflation in the real estate market is that interest rates tend to go up. Now, I don't think we're going to see 16% interest rates, because those rates are just insanely high. And I think you will have a complete stoppage of the housing market, which no one wants that to happen, let alone can afford that to happen. So even if rates were to go up, let's say 0.5% from 3.75 to maybe 4.25, even up to 4.5, what does that exactly look like as far as a mortgage payment goes? Well, let's just hop online really quick and check out a mortgage calculator here. So let's just take a $400,000 house, and let's say today our interest rate is going to be 3.75%. So your principal and interest payment is going to be $1,852. Our principal and interest payment is going to be $1,852. Now, let's say interest rates went up, and let's say we're now looking at 4.25. What does that look like? 68. And again, let's just say we're going to go to 4.5. What does that do? Now it's $2,027. So you can see the difference between the first two. You're looking at $116. And the difference between the next comparisons we made and the next comparison we have is only a $59 difference. So for most of you, that difference in $100 a month in a payment is not going to make or break whether or not you buy a house. I think the thing that is really going to affect a lot of people is maybe seeing a 4% interest rate or a 4 in front of the decimal versus a 3 or even a 2. And to be honest, I think we just got spoiled over the last several years with really low interest rates and amazing opportunities to purchase homes. Now, I can tell you this, talking to as many investors as I do all across the country, people are still buying houses every single day. An investor myself, I am still looking at purchasing homes. And as some of you know that have been watching my channel, I've bought multiple properties last year that have all worked out. One of the other topics to think about is the inventory shortage that we're seeing all across the country. There are still labor shortage issues. There are still supply issues as far as getting materials in. Here at Loan Depot, we're actually building out an office, and I can tell you for us to even get furniture is taking months to get done. I've had numerous clients that were supposed to close on brand new homes that the builder recently called and pushed out the closing date another 3 or 4 months. Why? Because they're not ready. They don't have the supplies, they don't have appliances, they don't have the necessary items and materials needed to finish building the house. So think about that. Even if interest rates go up 0.5%, there's still not a lot of inventory all across the country. So which makes it very difficult for this price to just all of a sudden just take a turn for the worse, and you see huge declines in values. Could things taper off? Yeah, of course they could, because it may slow down the buying that are out there. But I think overall, buyers that are looking to move, they can afford to do so, and they can afford to buy a house. I've had numerous clients that were looking at relocating mostly from the East Coast to the West Coast, and the West Coast to find states that have no state income tax. I think these are going to be two big drivers to keep the market competitive, to keep the buyers looking to keep purchasing homes. And the fact that the builders cannot build homes fast enough, I think that's going to be a problem for a while, because as the crash happened back in 2008, builders stopped building houses, and now they can't build them fast enough to keep up with the population and keep up with demand. So until we solve that issue of creating more affordable homes that people can purchase, I don't think you're going to see any slowdown in the real estate market. The other thing to think about is how many people have been making a ton of money in the stock market and in the crypto world. There are guys that have millions and millions of dollars that are probably sitting on the sidelines. And even if there is any sort of real estate correction or slowdown, I bet you those guys are going to hop into the market and they're going to be buying up properties left and right. So if you were thinking about buying and you were thinking about, is this the right home or time for me to be purchasing with inflation at where it is, or even with all the talks about the interest rates going up to 4% range, because we know it's inevitable, is that the right time to buy? I think the one thing you can take a look at is, what if your parents purchased a home back in the 80s when interest rates were 16%. What is that home worth today? Think about that for a second. I grew up in Hawaii, and the housing prices have yet to slow down. I wish my parents would have bought back in the 80s. I wish my grandparents would have purchased back in the 80s, because those homes would be worth millions today. And some of you might say, well, Sean, that's a very highly priced market. But I think that goes to say in almost any market, if you bought a house in the 80s, it's probably worth what you paid back for it then. So even if you can get into a home today at 4% with inflation where it is, what's that home going to be worth 20 years from now? What's that home going to be worth 30 years from now? The one thing that I think about is, what will home prices be when my daughter is old enough to then purchase a home? Is she going to have enough money from her job to be able to purchase a home? I think real estate, like we've talked about in so many of our videos, is a great way to build wealth. And I think for many of us, it's a big driver that's going to be generational wealth for our family. Because if you do own a home that's paid off, that maybe now it's worth a couple $1,000,000, that's going to be some money that you can leave to your kids. That's going to help them purchase their properties, because if things continue to go the way they're going, I just came back from California last weekend, and I was in Laguna Beach, and I looked at a few homes, and there was a house that was 3 bedrooms, 2 bath, 2,000 square feet, not even renovated by any stretch of the imagination. That home was priced at $2.5 million. $2.5 million. Let's think about that for a second. To buy that house, you would probably need anywhere from 5 to 10% down. So one, you'd have to have at least $250,000 to be able to put down on the house. And now a $2 million mortgage. What does that run you? Probably $10,000, $11,000 a month. How many people today can truly afford a $11,000 mortgage payment that's got $250,000 in the bank that they can put down towards a house? But if you've owned your home and you sit on it over time and you can pay it down, and your mortgage is going to be comparable to maybe what you're looking to pay for it as rent goes today, I think it's worth looking at purchasing. Forget the inflation. Don't worry about the interest rate, because if you can lock in your mortgage payment at $2,000, I can almost assure you that your landlord's going to increase your rent when your term comes due. And I've heard countless people reach out to us lately about that. Landlords are increasing rents $500, $900, $1,000 just because they can. And put that first property under your belt, so now you can continue to look for other real estate investment opportunities that build up cash flow. And it's starting with baby steps to get you to the next level. That's how I look at real estate. And I don't think inflation is going to kill the housing market. I think if anything, it may slow it down, but there are still so many people out there that can still qualify with a slightly higher interest rate. And because their job allows them to relocate, or they're moving for tax purposes, there are so many people that are out there that are going to be still buying homes and taking advantage of these opportunities that are out there. And I can tell you for myself, as an investor, if rates go up to 4%, I'm still going to buy. As long as the numbers make sense, you will see me still purchasing homes, and none of that is going to slow me down. So if you have questions about buying and you're still unsure about what you should do in your situation, I'm happy to hop on a call. And don't forget, you can always check out this playlist to learn more about how to get your mortgage right. My name is Sean Uyehara. I'll see you on the next video.